Akshay, hi. Good to have you with us. How have you been?
Doing good, yeah. How are you?
Doing very well, Akshay. This is a session which has been long in the making, right? We've been wanting to do this session for a fairly long time, right? And it's been funny, right? We haven't been able to shoot it, but I
Right.
think that's also good, right? It reflects that the market has been active, right? You've been looking at a lot of ventures, right? Um,
Absolutely,
and
absolutely.
it's an exciting scene in that sense, right? But actually, it's good to have you with us, right? Given that you've been a founder, you've been through a road of acquisition, right? You work with an entity which is now in the process of getting listed, right? There's a lot of
Right.
excitement there. And now to be investing in startups full time, right? Of course, apart from spending with time with them, hand holding them in the process, right? Helping them mature, right? To
Right.
fulfill the expectations of investors, right? It's phenomenal, right? What journey that you've had in last 5 6 years. Also, what's interesting is that I've had the opportunity of knowing you for the longest time, right? And you've seen this ecosystem evolve. You've seen the founders' maturity evolve, right? So who better to make a comment on all of that than you, right? So good to have you on the session, Akshay. And before we start, discussing about Kisho Capital and all the good work that you've been doing, the investments that you're making, the thesis behind the fund, your operating mechanics. Would love to. I of course know you, but for a lot of people who are going to be watching this, I think a little bit of an introduction is going to be helpful. So over to you, Akshay.
Sure, sure. Thank you so much, yeah. You're a little too kind. Of course, first of all, pleasure being here. To just give a background about where I come from. So I've been in the whole startup circle since I think early 2007. Started building a very basic website called the Indian Backpacker in the travel domain.
Interesting.
It was more of a college project gone wild, if you say. Uh, I didn't. I was out of idea, and I just had to come up with something, and that's how it started off. And while doing so, I also realized that there was a massive need out there. I mean, at that point of time, there was companies like, of course, Lonely Planet was the market leader at that point
Right.
of time. You had your Fromers, then a lot of Indian blogs as well. A lot of Indian forums were there, but there was no platform which was actually on ground. So the
Right.
Lonely Planet was again one publication that used to come out. It used to be rented all across Paharganj and Kolaba areas. So the stuff was not really updated at that point of time,
Right.
which is where I saw the gap. Bootstrapped uh, Indian backpacker. Uh, got a lot of help from my mentors. Uh, had a really wild ride onto that because when
Right.
you're bootstrapped, you're like you have to do everything out there, starting from pitching tents for people to gathering all that right information, traveling all across India all by myself, backpacking on a very literally a shoestring budget at
Right.
that point of time, writing it, documenting it, and then trying to mold it into a business. I think that was
Right.
one of the toughest part because what we don't realize that we might be passionate about a lot of things, and we might see a lot of other people are also equally passionate, but that doesn't definitely translate into a business.
Right.
So I think it was around the year 2010 when I started changing the entire model, uh, started moving towards content, high quality content,
Right.
did tons of changes to the websites. This was a time when there were no apps, and just to get a simple little one-pager website was one of the biggest pains I had to go through, especially the fact that you had to get it at a very, very limited budget per se. Uh,
Right.
but all in all, it was a good fun journey. 2015 is when uh, Indian Backpackers was acquired by Ixigo, all
Right.
thanks to Alok. I was in touch with him for a few years actually. We were working
Sure.
together on certain things. They were very interested in the community that had got built.
Hmm.
And 2015 is when Indian Backpacker got acquired, and I was heading mostly a lot of products there. Uh, Ixigo is, of course, one of the best places to be in.
Right.
The team is spectacular. I mean, it was more of a blessing for me than anyone else to work with, of course, Alok and Rajneesh, of course, the CTO.
Right.
Got to learn things that I never had. And the whole app journeys also had begun. I think that's where I got a lot of mentoring on a day-to-day basis, which worked out
Interesting.
for me. And so one thing that I realized was I was always into product management because at Indian Backpacker, that's exactly what I was doing.
Right.
I mean, getting into the depth of details that I for detail, the small little icons that I used to fight with my developers on that this needs to be here.
Right.
this is not the exact color that I'm looking forward to. And
Right.
I never realized that this is exactly what a product guy does till I actually joined Ixigo. And the best thing that I learned out there was, of course, these are gut decisions that you make.
Right.
But then the day you start making those decisions based on data, your life is sorted.
Right.
That is something that I started loving a lot. And thanks to Ixigo, I got that opportunity. There was a free hand to what I wanted to do. And the learning was spectacular there. And while doing so, of course, I realized that I also had a little knack for making a certain bets on entrepreneurs. In the fact that it had almost been almost 7, 8 years that I was dealing with entrepreneurs. All those earlier
Right.
days, there used to be a lot of events. Thai was very popular at that point of time. Robinhood was a very popular platform. So that's when I realized that I probably have a very little knack for choosing the right companies or maybe the right founders to be per se, because I
Right.
was hanging out with all of them for uh, almost 7, 8 years now, attending every possible event, trying to tie up and promote Indian backpacker in that.
Right.
And I realized that I just couldn't put in a lot of money back then. But at least in my head, I knew that the right bets were those,
Right.
which of course scaled massively. Uh, so it's I think around 2000, late 2017 when I started investing.
Interesting.
Started off in a little hotel business offline just to be on the safer side because I knew what I was getting into.
Right.
Posted, I think 2018, I made a good bet uh, with FleetX. They're still doing a brilliant job out there.
Interesting.
They were, of course, backed by India Quotient, B Next, all of these good guys.
Wow.
So one thing that I was looking, of course, forward to was the team.
Interesting. Akshay, we're going to talk about your portfolio in just a bit, right? But before I do that, right, Akshay, you've been, like I said, right, and I think you kind of took us through your journey, right? These were very, very interesting times, right? I mean, when I think of say 2007 or 2010, right, I just find it so much more difficult to fathom, what the world was, right? I mean, today everything is available just so much more smoothly, right? I think those were times which were, lack of internet penetration. It took forever. Information wasn't as aligned, for example, right? You had to
There
make
was no
decisions.
information to be
It was a
honest at that
fragmented
point of time.
ecosystem. It was a
So
fragmented ecosystem, right? And I think you're absolutely right. I think that possibly that journey, that evolution, helped you very uniquely to understand how founders behave and act and react to certain changes, right? And then the changing demand of
right,
the consumer landscape, right? And I think the consumer has become so much more demanding, right? Subconsciously, right? And I think founders who've been able to react better. I think you're in a very unique position or vantage point because you knew them, because you were hanging with
right.
them. You understood what growth was, right? I think that's possibly helped you do
Absolutely. In
these
fact,
amazing
this
investments,
is one thing that I keep telling on a lot of forums as well.
right?
So just to realize between that time from 2007 to let's say 2017, there is a whole generation of people who've skipped
Right.
the desktop.
Correct.
Never used a desktop. They don't know
Right.
what a desktop is. So that's how the whole
Absolutely.
transition has absolutely happened. Everything is now on mobile. But all in all, I'd still say one thing: the core still remains the same. So if you talk about 2007, it was pretty similar.
Right.
It was about the users. It was about taking care of solving an actual need. It's the same right now. It's
Right.
just that technology has got much easier. I
Right.
mean, building a let's say a 5-pager, very basic HTML website was one of the biggest pains that I had to go through. Today, you've got no coding websites up in minutes,
Interesting.
as well
Interesting.
as that. But the core, I think, still remains the same. And anyone who understands that core uh, is always going to be successful all across.
I think one thing, Akshay, that has definitely changed, right, is the consumer expectation. I think consumer, from not knowing what they wanted, which is possibly the case in 2007. I think it was very early times, right? I think it was still evolving to what we've seen, right? The TikTok generation, right? I think it's just, the inhibition is gone. Earlier, there used to be an inhibition of sorts, and I'm sure you'd agree with that, right? Because people were not necessarily sure, knew there was a lot of, also a lot of negative vibe in the sense that, financial transactions were happening of a variety. People were getting, people weren't necessarily comfortable, right, with the entire environment. Today it's completely different. I think there is just so much which has changed, right? I think it's difficult to fathom, but I think more importantly, the inhibition is gone. People are just so much more comfortable. I think the back end infrastructure today is aligned just so much more efficiently, right? And I think the times couldn't have been better. I think Corona is, while of course it's been difficult for each one of us, I think it's been
A blessing in disguise for technology.
Absolutely blessing in disguise for technology, right? I mean, I was abstaining myself from saying that, but I think it's been a revelation, right? I think none of us expected the transition to happen so much more faster, right? Actually, we're going to move into Kisho Capital, right? I think this, which is very core to our discussion today, right? Would love to understand the construct of Kisho Capital. I mean, how large is this as a fund? What are the areas that you are looking to invest in? What are typically the terms of investment? I'd love to understand some of that construct of the fund and how you operate.
Right. So the whole concept of Kisho Capital, I'll tell you how exactly we shaped that up. The Kisho Capital is me, my partner Ankush Nijavan and Priyanka Nijavan. Um, so this was more of a friends and family round that we used to
Right.
keep doing. And at the end of the day, it used to be, oh, thank you so much. And we used to think to ourselves, we just made you an 8x or a 10x
Right.
within, let's say, a 2 years time or something around those lines. And thank you is not what we should be working for now.
Interesting.
So that's when we clubbed all of our resources, all of our networks, and created a syndicate fund.
Right.
We did not want to move to a proper AIF in the beginning itself because we want to still get more investors in. Prove we've of course got a good past record. May that be the initial investments that we've made onto, but at the same time we formally wanted to have a better portfolio and then go into the proper AIF structure.
Right. Very interesting. So, what's the construct like? I mean, you're a syndicate, right? Which is
Right.
investing. What are the terms of investment, right? What are the key areas? I mean, typically syndicates when you look at it, right? I mean, given that you've spent a lot of time in travel, Ankush comes from a massive background in travel, right? I think, there are very few people who had the kind of expertise and experience and exposure that the way kind of he has, right?
Right.
What are the core domains, right? Is travel a key focus area, or now you're agnostic fund, right? Which is looking at pretty much everything, right? All emerging, exciting opportunities that are available in a very large market like India, right? What is the thesis there?
So as far as travel goes, I mean, this might be a little surprising, but we don't invest into travel at all, especially because of a conflict. Uh,
Right.
apart from that, we're sector agnostic, of course. Uh, what we've not really built a thesis on till today, I mean, which is going to be surprising as well, is the D2C.
That's
Uh,
interesting.
we come from a hardcore tech background, a product background. This is our personal thesis, of course, and our
Mhm.
personal opinions. Uh, Tech ventures can scale much more easily
Right.
and much more faster as compared to a D2C. And of course,
Right.
D2C requires a lot of
Sure.
operational work as well as a lot of capital also goes into it to build
Right.
any kind of brand. The guys who've actually built it, I mean, it's absolutely unbelievable and fantastic that they've been able to achieve what they've done.
Right.
But at Kisho Capital, we still have not yet built our thesis around that.
Interesting.
Uh, what we do, of course, love is the fact that, so coming from the whole product background again and the data, we of course love anything and everything that is about automation, anything which involves a lot of artificial intelligence, uh, making the user's journey a lot more simpler. Uh, Anything and everything on those lines, I mean, we completely are onto it. One thing that we don't really share is the fact that the companies that we invest onto, we personally feel that in case that the company just cannot work,
Right.
can we actually build it ourselves? So the
Right.
companies actually get that kind of a confidence. We of course go ahead and invest onto them with a blink of an eye.
Wow, that's phenomenal, right? The last point that you kind of highlighted is a very important and a critical point, right? Because not a lot of investors look at it that way, right? I think they are largely dependent on the teams to come in and build those businesses, right? I think what you're talking about is very very different, right? Uh, Akshay, I would want to dive further onto that point, right? But before I do that, I'd love to understand your portfolio. Where does the portfolio stand today? That's one. Also, what I want to understand is at what stage do you enter, right? I mean, are you coming in at a pre-seed level? Are you coming in at a seed level? I would love to understand that and the check size that's there when you sign up.
Right. So first off, I'll pick that first question up. Uh, our check size is anything between, let's say, $100,000 to
Mhm.
about $200,000.
Interesting.
This is, of course, coming from a hardcore entrepreneur who's also a Cindy. I figured the fact that any startup that is pitching, we of course want to get in early. We'd love
Sure.
to write the first check. It cannot be pre-product That
Right.
is one of the criteria. We need
Mhm.
certain traction at least, like an
Right.
acceptance in the market from the actual users.
Hmm.
Uh, After that, we feel that there is nothing that we can really judge on to for a startup,
Right.
except for the team, of course. And we need to trust those Excels
Hmm.
or the projections that are there.
Right.
$100,000 is a good enough amount in India
Hmm.
to at least come somewhere close to the projections that you're mentioning on the Excel sheets.
Right.
Post that, if you are successful, or at least you get at least somewhere close to what you've been projecting, we're
Hmm.
more than happy to do a follow-on round. We're more than happy to connect with our entire network, probably a
Sure.
bigger VCs as well.
Hmm.
But I think that is the very sweet spot where it should not be very problematic for the entrepreneurs
Interesting.
as well as for us.
Very interesting. Akshay, the second leg of my question was, would love to understand the portfolio that you have, right? And then we go on to the original question, right? The original point that, I wanted it to be a part of the conversation. I'll come to that in just a bit,
Sure.
but would love to understand your portfolio.
Sure. So our portfolio was mostly a mixture of Ankush and mine.
Right.
Most of our investments that we've been doing. I think the first initial investments was into InShots. Then there was Dine Out. Uh,
Interesting.
there was Less Transport. There was FleetX. There's Intracker now. There's a company called Med Delivery. Um, a few more. I mean, there's Believe.Club, which has come up.
Interesting.
QRX, where we met, of course, that's there.
Right.
Apart from that, we've had quite a lot of all of these portfolio companies,
That's
mostly sector
amazing.
agnostic, of course.
That's amazing. Akshay, one of the points, team is a critical construct, right? Team is a
Absolutely.
critical construct, right? And you mentioned in through the course of conversation, and the point that I want to actually delve on, right? You mentioned a very important thing, right? That you when you look at an asset, right, you look at it from an ability to run that asset in case the team is not able to perform, right? Now that is not something that you hear on a daily basis, right? I mean, typically
Right.
investors want to stay away from what the business business has its own journey, right? Teams have a certain vision, a thought process to build that business, right?
Of
An
course.
investor's job is very, very critical when they take a call saying that, listen, this team can run over a period
Right.
of time. If it fails, they could possibly try to save it by bringing in some, say, additional people
Right.
who come from the fraternity, but never taking charge of the asset, right?
Right.
What you alluded to is different, right? What you alluded to is your, as in the syndicate's ability to manage an asset in case the team fumbles, right? In case the team is not able to perform right, or build the asset that as the way it was expected to, right? Now how difficult is that to maintain, right? I mean, it's like being a batsman on the fence, right? You're always itching to bat, right? I mean, how do you control that temptation? Would love to understand
No, no, of course. I'll just put it in a different way altogether.
that.
We don't interfere in any of our portfolio companies. We are more than happy putting money on those entrepreneurs.
Right.
When I say that, we don't mind even getting our hands dirty with the entrepreneurs.
Hmm.
So let's say, for example, they are facing certain issues. I mean, we've actually seen that happening a lot during COVID as well.
Sure.
So what we do is we basically get our hands dirty with the entrepreneur itself, trying to
Right.
help them in any way possible. Uh, may that be with getting them extra debt within our network,
Right.
connecting them to all the guys that are necessary for their circle, uh, helping them grow, advising. So we literally are like a co-founder for them
Right.
whenever they
Interesting.
need it.
Very
So
interesting. I think.
we don't really plan to take over any assets, but it's just a mental thought that worst come worst, if uh, it's completely going down the drains,
Right.
and it's a lot of times that does happen. I mean, we've actually seen those cases ourselves, but never interfering with the entrepreneur, but at the same time being more of a support engine for them. So I
Interesting.
like to call it still the proper angel investors by heart and
Interesting.
entrepreneurs by soul, of course.
I think what you were possibly sort of alluding to, and I hear what you said. I think what you possibly sort of alluding to, and you're trying to make a point, is that you come with that operating experience, right? Of a founder,
Right.
you've done that for a reasonable time, right? And I think that's what the syndicate brings together, right? So in case
Absolutely.
there is a founder, who's possibly say missing motivation, right, because of executional issues, you could actually step in and help them build that, right? Become a support system,
Absolutely.
right?
So, in fact, just to add to that, I mean, we see a lot of co-founder conflicts as well,
Right.
and it's much more common than you can imagine. I mean, so that should probably we step in not as a co-founder, but at least helping the co-founders who still want to build it,
Right.
who we've actually put our trust onto. probably helping them in, let's say, hiring, probably getting them those connections,
Sure.
probably even mediating with them, trying to solve issues. Uh, but anything and everything, because at the same time, like I just mentioned, we are more of on the line still angel investors per se. So we
Right.
need to act like an angel with them to
Interesting.
make sure that they scale.
Actually, one thing which is very interesting, right? I mean, I find it to be very challenging. When you're a founder, right? We get into a tendency of believing, right? Because if you don't believe,
Right.
you'll possibly not be able to build, right? So there's this, as a founder, there's this fool's confidence, right? I'm sure you've had those moments. I've had those moments, right? And I'm sure every founder has this, that you believe in it, right? And for some reason, you think it will play out, right? And a lot of occasions it does, a lot of occasions it doesn't, right? But beliefs become important, right? Now, what I want to understand is that from a zone which is that where you kind of driven to make something work, right, to investing which is just so much more patient, right, which is I consider investing to be like fishing, right, where you have to be super patient, right, you just have to
Right.
wait for things to play out, right? How has that transition been for you, right? How difficult is that for you, right? I'd love to understand
Right. So I think my job helped me a lot while I was at Ixigo, because being an entrepreneur all your life, you're addicted to doing tons of things
that.
at a very, very fast pace,
Right.
uh, and being in charge all the time,
Right.
which I think I got a lot of space at Ixigo to calm down and realize that the teams can take over. Delegation was one of the most important things that I realized at that point of time. Uh, it took a while, but I can confidently say that I'm pretty sorted in that manner as of now. Uh, Probably since the past a year or so, in fact, because now we have multiple companies to take care of.
Right.
So it's not going to
Interesting.
be just one company or one product. And you've always, that is one part. And of course, you've got to get new companies as well into the portfolio,
Right.
uh, keeping up with times, getting new, I mean, Web3 is just around the corner,
Right.
diving into that. And of course, as an investor, you need to keep reading, keep studying all the time as well. So the time that I had as a founder, I don't have that anymore.
Interesting. And gymming helps.
Of course, 20%.
Interesting. Actually, one of the things, right? And this is my common question, right? Whenever I'm talking to anybody who's in the investing space, right? Be it individual investing, be it as a fund, as a syndicate lead, this is a common question that I have for people, right? I and everybody has a very unique way of assessing teams, right?
Right.
I think business is something you're broadly sure in terms of how it's going to play out, right? And strategies keep changing. There's nothing that you can really
Absolutely.
do because India is a
Absolutely.
fairly complicated market, right? Um, what are some of the challenges? I mean, how do you and like I said, right? One of the things that is very unique to everyone who's in investing, right, is how they look at and assess teams, right? You mentioned of co-founder conflict, right? I would have loved to ask you a larger question, but this is something which is very very critical, right? What are some of the challenges when you're investing, right? When it comes to interpersonal relationships of, say, teams, founding teams, right?
Right.
What are some of the do's and don'ts that you look at, right? And it becomes important to understand that because, like I said, many people are going to be watching this. Many people don't necessarily know how do they need to structure their teams. What's the right structure? How do they divide tasks? What's going to be an overlap? Who's going to decide? Who's going to decide what? What are areas there where joint, for example, agreement is important.
Right.
There's a lot of complexity as far as that goes, right? And as you grow in a relationship, right, it just becomes so much more complex going forward, right? How do
Absolutely.
you assess this? How do you look at those challenges? What are some of the challenges which are like a complete no-go area for you? What are the assessments that you make in the process?
So first of all, of course, team is of course the core at which we invest.
Sure.
We look for complementing skills in the founders,
Uh-huh.
which is of course a very common scenario all across.
Hmm.
One important thing that we also look at is uh, similar backgrounds.
Right.
And when I say similar backgrounds, I mean financially as well,
Hmm.
because we've seen playing that in the past that probably one is not really in need of a massive amount of money actually.
Sure.
So the struggles for both the founders are going to be very different.
Right.
And there's a higher chance of the person who's actually struggling for his day to day
Very
to
interesting.
be equally motivated.
Right.
And in case that is there, we of course that is of course one thing. The other thing that we look forward to is an equal distribution on the equity as well,
Interesting.
or if not equal, at least somewhere close. I mean, you can never
Mhm.
never have someone who's at let's say 80% and the other one at 20%. Apart from that, complementing skills, of course, is there. Uh, One very important thing that most founders ignore, especially the ones who are friends in the very beginning.
Right.
First of all, don't look out for a co-founder. Let the
Right.
co-founder join in. I mean,
Interesting.
you don't definitely need to be friends. You don't definitely need to start in your
Right.
college dorm room. Make sure that the founder that you get is equally sold on the idea to build.
Hmm.
I think because
Interesting.
what I've actually seen in the past as well, there's a single founder
Right.
who's trying to build, who's trying to make a change, but
Sure.
most of the investors do decline, saying that you need a co-founder, and he goes out there, looks for someone, and probably
Sure.
even gets someone on board. But
Right.
that person mostly is not equally motivated. Unless
Mhm.
until you find that it's like a complete marriage again,
Right.
you really need to be sold to the idea. You really
Right.
need to be motivated enough that yes, both of us, or three of us, or five of us as well, are going to build this.
Interesting. Actually, I was in a recent conversation with somebody, right? And he said that, one thing I don't want in a team is two opening batsmen, right?
Absolutely,
It just ruins everything, right?
absolutely.
You want a Sehwag or a Sachin as an opening batsman, and you also want a Dravid, right, who could really handle it amazingly
Absolutely.
well, has a mind of his or her own, right, can bring in that stability which is required without necessarily getting into a conflict of who's going to open, right? And that could be a big problem, right? In the entire scheme of things. I think at a level of aggression also, there's a lot of assessment that has to happen there, right? Who's coming from where, right? Because a lot of businesses, for example, and the consumer demand in the landscape today is changing, right? Consumer doesn't necessarily wants a lot of aggressive push, right? A lot of
Correct.
subtleties, for example, now kind of seeping in, right? To in terms of how the consumers want to prioritize products, services, how they consume, right? I think that there's this entire change which is coming in, and I think that subtlety becomes very important in the entire scheme of things. Just to sort of on what you said, right? A lot of these points also become very critical in the process.
Absolutely.
Akshay, you've been an investor in crypto, right? Now, this is a question I want to save for a little later, but I'm going to bring it up, right? You know, it's a divided world, right? Between people who like cryptos and people who don't like cryptos, right?
Of course. And I've been
Uh,
on both the sides, so
interesting. How are you looking at it, right? I'd love to understand from you because you've taken a fairly, very recently, right? You've taken a bold call where you've invested in, Believe, uh,
believe.club, yeah.
Believe.club, right? What's the thesis there? What is it that you're banking on? And what's your expectation?
Sure. Uh, so I'll give a very basic example.
Sure.
A country's wealth is judged by the kind of gold that it has, right?
Right.
We all value gold. That is why it's valuable.
Sure.
Otherwise, it's just a metal, right?
Mhm.
Today, let's say 100 out of 100 people, all of them do own gold.
Right.
So it's absolutely accepted.
Sure.
Today, only 10 people out of those 100 own cryptos.
Uh-huh.
So it's not accepted.
Right.
The day 70 of them start holding it, the 30 will have to accept it. That is just my opinion.
Right.
And so I see it that way. And I mean, crypto is just a, a word that is being spread just like that without understanding the deep down thesis behind it. Why
Right.
exactly is this happening?
Uh-huh.
What is the need for a cryptocurrency as well?
Right.
You need to deep dive a lot onto it, understanding what blockchain is. Why does
Mhm.
blockchain exist? What
Right.
exactly is the decentralization that all of these people are fighting for?
Right.
Once you understand, that's when you need to get into the details. What exactly is a blockchain? How does the blockchain work? What are nodes? And so on. Why
Interesting.
is the value of Bitcoin growing? Why will Ethereum grow more or not? So it's a much larger picture that one needs to understand. And I absolutely understand this is not going to happen tomorrow or day after or even a
Right.
year down the line, but it will still happen.
Right.
Why? Because of the fact that it creates a lot. When you start understanding and deep diving into it, you would understand that there is a lot of trust factors in the entire society.
Right.
All of those go away. There's a lot of centralization of digital power per se,
Right.
which needs to be broken to just bring about the balance.
Interesting. Would love you to comment on Believe, right? That's your latest baby, right? That you've kind of
Absolutely.
developed, right? So would love to hear about that.
So of course, again, I'll just mention the fact that being a Sindhi, it's more about business for us and understanding business. So
Right,
NFTs, of course, have been popular, extremely popular rather.
right,
My first question to the team again was, there are a lot of NFT marketplaces out there. What is so different?
right,
So the whole answer that came in was, and the pivot that took place within the team was the fact that uh, it needs, once you've already got an NFT, what after it?
right.
So that's when we are trying to build a derivative platform out of NFTs. We see,
Interesting.
so eventually giving more value to the user. I mean, probably getting a loan against that particular NFT, which is not possible at this point of time.
Right,
So it is possible, but very limited resources.
right.
So I think that is something that we've are looking at. Because
Interesting.
NFTs are here to stay, of course. So is crypto. Uh, the competition with NFT marketplaces is massive, massive. I mean, not India is still catching up, but if you look at the entire globe, it's massive out there. So I was very sure I don't want to invest onto a marketplace per se, but
Right.
coming up with the entire derivative platform, I think is going to be something in the future which is going to be extremely popular.
Very interesting. Actually, that's a bold call that you've taken in the future, right? On the future. Let me put it that way, right? Because
Absolutely.
I think there's just a lot of fluidity, right? And I completely understand and completely agree that there's this a lot of excitement and exuberance around cryptos, right? And I think globally it's being discussed, right? I think people are talking about a decentralized economy, a movement of money happening, movement of say tokens happening, right? And which is not necessarily dependent on the functioning of a certain country, right? It's just dependent on the functioning of utilization of a certain smaller silo, right,
Right.
or a representation of that, right? But I think it's just so much more complex, right? I think we're a fairly divided lot, right? I think for all of that to come together, which it is, right? I think is going to take a little time, but I think that's a very bold call that you've taken because what you're possibly doing is the thought that it's something which is going to be significant, the thought that people are going to have it as an asset class and possibly leveraging it for say a variety of reasons,
Right.
that brings in additional liquidity, right? Which is great, right? And I would love to see it play out, possibly at some point take a bet, right, on NFTs
Of
and
course.
cryptos, right?
Hopefully
Akshay,
soon.
hopefully soon, hopefully soon. Akshay, an important point, right? And I would love to discuss COVID, right? I mean, I think COVID is part of our lives now. We've been in
Absolutely.
it for about 2 years, and I think there is no running away from it, right? One of the things that has significantly changed, right? And I want to understand your perspective and the investor's perspective of this, right? Is that the world that we lived in till 2019, right? We essentially saw the transition, right? The way it happened. We were still living in a fractured economy, right? And when I say fractured economy, what that means is that we still had offline, online consumptions. The debate was still on, right? Offline versus online. Uh, and both of these pieces continue to optimize for themselves, right? Come 2020, right? All of a sudden we've just switched, right, from being a very large offline economy, a large offline setup in terms of money, rotation, movement, to an online transition, right? Nobody
Right.
expected us to sort of jump ship so quickly. I mean, these were plans that were there till say, which would have played out over a period of time till about 2030, right?
Absolutely.
It just happened within a matter of a few months, right? And now there is a certain consistency which is coming in, right? As an economy, we want to go back to the normal, right? But every single time we go, there is a certain wave of corona that comes in. In a way, what is happening is our digital tendencies are kind of setting in. We've just become so much more comfortable using UPI, transfer payments, so on and so forth. Right? Now, what is happening in an environment like this is that we are now also becoming a society, given that we're not able to experience something physically, we're now dependent on, say, reading more about it, right? And that essentially means that the requirement for content overall is going to be so much more higher. Brands will have to communicate a lot more aggressively. Consumers are going to engage in with that content, build a certain trust, and then buy, right? That essentially means the playbook that businesses had before 2019 are going to change completely, right? How has
Right.
that changed your thesis? I mean, this is a question that I can actually dig further through. But what I would love to understand is how has that changed your playbook, right? In terms of your assessment of assets, in terms of the priority sectors that you had, for example, right? And the thesis that you had of investing, right? What all of a sudden, for example, cryptos is what we spoke of, right? What are some of the
Right.
things that have now outshined everything, saying that, oh, damn it, we didn't expect this to be an opportunity, and this is now an opportunity, right? D2C possibly is could be one of them, right? Where you're
Right.
not necessarily sure of how it's going to play out. You're more focused on technology, but technology is getting very quickly commoditized, right? Eventually,
Absolutely.
it's moving into a product ecosystem. We're becoming a very large product economy, right? The arm supplier is how I look at technology, right? A lot of that game is now gone to the bigger boys, right? Now it's about who rides that infrastructure to build larger brands, right? Because of trust deficit and so many other things, right? What's your sense of all of this, right? I mean, this is a fairly complex problem, right? And to top it up, right? We're not a homogeneous economy. We're a fairly complicated economy, and you know what I mean,
Of
right? I
course,
mean,
of course.
north, south, east, west, we behave completely differently, right?
Absolutely.
Uh, how are you viewing this going forward?
So I'm actually viewing in the sense that businesses are still the same.
Hmm.
They're still producing the same goods. I mean, pick up any industry out there. I mean, of course, work from home has been a blessing, at least for
Right,
us. Uh, we've
right,
saved a lot of money onto that. So we realized that it is possible, right? I mean, earlier this was one of the biggest problems that we used to face. Everyone, I mean, most of the company that I had earlier invested, and I'm a director of a couple of others as well,
sure,
they are very happy staying at home, working even more. Uh,
right,
I have to pay them less. I mean, that is one thing that has worked out.
sure.
Co-working spaces, of course, went for a toss. Real
Right.
estate for a toss. Travel went for a toss.
Hmm.
Uh, Everything was hit back. But at the same time, I just consider this particular time as a transition time for a much
Sure.
better future.
Right.
Uh, I'm not going to get into the whole metaverse concept, but at the same
Right.
time, you pick up any industry, you pick up the agri-tech industry.
Hmm.
I mean, the kind of technology that plays in today,
Sure.
uh, the new so-called social networks for farmers that has come up, the kind of
Right.
penetration that we've got onto there, they can easily start selling their stuff online again,
Right.
rather than having to go to the entire mandis and following their entire long process,
Sure.
traveling. Tons of things have changed.
Right.
Uh, Pick up the job sector. I mean, just look at the way Apna has been scaling, especially in the tier two, tier three markets.
Right.
Gaming has picked up. Everything has picked up, but of course, this is one of the transitioning time which will uh, a lot of people will of course suffer because of it as well.
Sure.
But the ones who actually get it on time, they'll be the winners. I mean,
Right.
technology is something that everyone will have to. It's not a choice anymore.
Right.
I mean, probably 5 years back, if you still no, I don't want to sell online. I'm happy selling where I am.
Right.
But that's
But
not a choice anymore.
correct. Exactly. Right. But Akshay, I mean, how complicated is this getting, right? Because, like I said, right now everybody is selling in the same market, right? You're eventually on the same platform. You're in the same ecosystem, right? Which essentially means it's a perfect market situation, right? Which is just so much more complicated, right? Things are going to get commoditized very, very fast, right? When you lived in an offline world, right? I mean, my conversation was with you was independent of what my conversation was with the other person, right? For example,
Right.
in an online world, we're selling on the same platform, right? Price discovery happens just so much more faster, right? Which essentially means abnormal profit zones are going to be very small, which essentially means, I mean, going by the Sindhi dialogue that you made, right? You know, Cash flows might look very, very inconsistent, right? Your ability to price a certain product at a price because of the creative aspects that you bring into it, right, is going to be just so much more limited. Uh, what did you make out of it, right, as an investor, right? Because you're possibly not going to have a lot of those hitters in your portfolio. You might have very functional assets, right, which have a limited upside, right? Because the temperament and the tendency of the consumer is going to change just so much more faster because they're exposed to a lot of content, right? Now that complicates it for you, right? That complicates it on the output side of it for
Actually,
you.
in fact, I think personally that works very well because
Interesting.
the sooner they do that, the sooner
Right.
transition happens. And it gives much more time, as in the transition is much faster, so
Sure.
that the teams can pivot even faster. I mean, there
Mhm.
is money for everyone. Money is
Right.
still being spent, either offline, online, it is still being spent.
Right.
The point that you mentioned that probably everyone is selling on the same level, I'm in fact much more happier about that because
Right.
the platform makes money,
Right.
the platform gets me addicted and charges me extra.
Right.
The sellers who are selling it, if you actually get into the in-depth of things, may that be furniture or any line that you pick up, they
Mhm.
are selling it at a much expensive price as compared to an offline
Right.
till today. May that be fruits, vegetables, chocolates, anything and everything. Why?
Interesting.
Because I'm addicted as a user to the
Right.
platform. So I don't think the cash flows or the profits are going to be a problem. I think just the sooner everyone gets addicted to all the platforms, I think the better it is going to be.
No, interesting. I think that's a good way to look at it, right? And I was another conversation that I was in, right? And the founder made a statement. He's like, listen, we are, and this was a fintech startup, right? We're in the business of funding businesses, right? We're in the business of providing capital, right? The more transparent ecosystems that they operate in, the better it is for us, right? And I think what you
Absolutely.
also possibly saying is in a way essentially the same lines, right? That the more people hop onto these platforms, the more transparency is gonna come there.
Absolutely.
And I
Absolutely.
think
The better products you get.
and I think what I also read, without of course you saying it, right, is that your investment philosophy is more skewed towards platform approach rather than a product approach, right? Something that you kind of while it's not say registered as part of your thesis, right, but that's essentially how you're kind of playing it, saying that listen, if there are more and more people who come in and play my table, right, my table swells, right, and the house makes money by the end of it, right, and I think that's
Absolutely.
that's that's
I
that's
mean,
a good way of putting it.
just look at the B2B SaaS startups that have come up,
Right.
the level at which they are scaling. We never knew that there was actually that big a market out there for anything and every industry that you pick up.
Right. And people will pay for it.
People are paying for it. I mean, like the one that I was just mentioning to you, med delivery, they deal with pharmacies.
Right.
I've never seen any pharmacy pay anyone anything ever.
Interesting.
They are paying
Interesting.
subscription fees because it is making their life much easier.
Interesting. Actually, what is that one change that has you loved, right? In the founders in last say couple of months, right? Ever since COVID hit, right? What is that one change that you think is amazed you, is overwhelmed you, right? In founders, is there a difference in maturity that you come across? But because I am seeing a very different and a very mature set of founders coming in, right? And I mean, we've done a lot of interactions with fintech founders, for example, right? Fintech founders, unlike say a lot of other founders, right, are necessarily, if you look at the average age of fintech founders, you'll typically see a 30, 32 to 35 sort of a bracket, right? They work for 5, 6, 7 years and then are kind of starting out, right? And that's a very mature audience, right?
Of course.
But overall, when you look at it, right, given that you're agnostic, you're looking at, you're talking to many founders, right? What's been your observation? What is that one fact that you really liked about the changed mindset of the Indian founder because of COVID?
Well, I personally think that the kind of problems that these guys face, we are mostly into getting into probably a seed round or a pre-seed round and around that.
Sure.
So most of our portfolio companies don't really have a lot of money just to burn away. And
Right.
especially when COVID hits and business goes down, it's a massive, massive problem.
Right.
I mean, not just it, it's not just a money problem; it's also a demotivation and a struggle problem that starts in their head.
Right.
What I realized was that these guys are much stronger than the time that we had, probably around 2007, 2008. The kind of support system which is out there, that is way better now.
Right.
And a lot of these founders tried to pivot. They kept on fighting at least. I mean, I think that's the one important thing that did come out. Uh, no matter whatever the stress levels were, I still saw a lot of founders fight it out.
Right.
I mean, one of our portfolio company was about to sign a brilliant term sheet and would have got a lot of brilliant exit as well.
Right.
Sadly, that did not happen, but they still kept the fight on
Right.
and eventually got sold off.
Interesting.
Uh, but at the same time, the fight was there. I mean, this was a real fight, especially the younger generation which was out there.
Right.
They did not just give up, say, it's COVID, my business is out. And I'm talking about someone, not in my portfolio, but a couple of friends, and especially in the travel industry, that was massively hit.
Right.
So I
That's an
think
interesting point.
we are
That's an
much, much
interesting point. That's an
stronger
interesting
now.
point. I think what you're saying is that the character came out, right? And
Absolutely.
that was not. I think a lot of people were possibly comfortable as well, right? I think this was a time which brought in a very different,
So I'll tell you the
element.
best thing that I learned was when you are running a startup or anything, you've always got your competitors out there.
Right.
And you don't really get enough time to just sit, relax, and actually strategize.
Right.
When I say strategize, you are mostly solving day-to-day problems,
Right.
trying to compete with small little hacks,
Right.
not strategy hacks.
Right.
This was a time when your competitors also did not have any work.
Right.
So you could actually sit with your team, understand your own business model, plan for the year ahead, plan for COVID, because everything was shut at that point of time.
Right.
not really competing. You're like out of the. It's like a break from the competition as well,
Interesting.
and everyone is going to open up on the same page. So whatever strategy, best strategy that you put in place, will move ahead in the next coming months. And in fact, we saw that happening as well.
Interesting. But I have a slightly different opinion on that, right? I think the early few months were definitely that, actually. But
Right.
I think now that the consumer landscape has shifted, right, from an offline setting to an online setting, and like I said, right, the discovery is just so much more faster. And the beauty is, we've been raving about cheap internet. I think it came in the most handy around these times, right? The arbitrage that existed, right, the information experiential arbitrage that existed, I think has gone down substantially. What that means is that today all of us are essentially consuming from the same screen, right? A lot of us in tier A cities are consuming a lot of global content, right? Tier 2 cities, a lot of global content is being consumed, right? Which essentially means that the companies here in India will have to calibrate and recalibrate themselves very, very fast to enable all of that, right? From a product standpoint, from a creativity standpoint, so on and so forth, right? My sense is, and I think a lot of this is going to be very short lived, right? So fads are going to fly much faster, product life
Absolutely.
cycles are going to be much shorter, right? What that means is that, while of course we had that breathing time of a couple of months, I think what we're headed into is massive craziness, right? From a consumer standpoint, and consumer is not going to stop, right? Which in a way is good because it's going to bring up many, many other opportunities for a lot of other players, right? And I think creative expression, be it in a service form, be it in a product form, I think it's going to take off. What we need to just wait on, right? And is my thesis, right? Is the availability of disposable capital. The more disposable capital that we're going to have in this in the ecosystem, we're going to start to see more and more products fly, right? More and more creativity getting incentivized in the process. And I think that's essentially where we kind of headed, which is very interesting. We
Absolutely, absolutely agree on that because see, there's tons of capital available, especially at this point of time, thanks to COVID again for that matter. Uh, Even the biggest family offices have started getting into startups.
right,
They've realized that they've put in most of the money into, let's say, real estate, the stock market, and so on. But they've
right,
seen those downfalls as well, especially because of COVID.
right.
And then, and of course, you've got all the best newspapers and publications every day telling them that here is another unicorn, here is another unicorn, here is another unicorn.
Right.
And even the biggest of guys are just trying to figure out. We've been working for the past 50 years in this family business. We are the top guys, and still our valuations are almost the same.
Right.
I think they've started diversifying, not just the big guys, not just the Tatas, Ambanis, and Reliance, and all of those guys. Even the smallest of family offices have at least started investing.
No, actually, and I think that is something which we're going to see all the more, because
Absolutely.
I think none of the and I've had the opportunity of knowing the older world guys and a lot of professionals from who kind of peaked in their careers till about say 2019, right? And then I'm seeing the surge which is happening, right? And trust you me, irrespective of all the data which is available, the decision making has gone for a toss, right? I think there is a different DNA which is expected, right? And I think there is, while of course people can continue to question, right, the viability and or the valuation which is being offered, right? What they still don't realize is that these valuations for a billion people market are still very, very cheap, right?
Absolutely, absolutely. I
And
mean,
it's phenomenal, right, in that sense.
absolutely agree on that because so it's
And
actually
and a lot of
not a,
traditional businesses will not see the light of the day, right? We've seen Mensa come up becoming a unicorn in under a year, right? It's possibly going to be one of the fastest from where it is to listing journeys that we're going to see. It's possibly going to be competing with the likes of Hindustan Lever, right, and some of the other larger behemoths we've had in the
of
process.
course.
uh, but it's going to be it's a lot more sharper, right? It's being designed for a digital world, right? Which a lot of these older world players have not been able to sort of understand, gauge, and transition into. Um, so I think these are things.
I wouldn't say they've not been able to understand per se, but I just say that they're a little short on the execution bit. I mean,
Is there a
they of course
denial?
understand. No, no, of course I understand. They are there. They are
Right,
trying to achieve that, but at the
right,
same time, they have their set processes in place. So the biggest difference I think between a startup and a business, startup scales at a rapid pace.
right,
I mean, the decision making is way too fast. I
right.
mean, they might fail a lot of times, but at the same time, they're still experimenting and just moving ahead, which is not really possible for the much bigger brands because they still have that set infrastructure of decision making in place, which I
Right.
think takes up a lot of time.
Interesting.
So,
Interesting. Akshay, we're towards the end of a conversation, and I mean, how I want these conversations to keep going on. There's just so much to discuss, right? And I think we're in very, very interesting times, right? Akshay, what are the next, a couple of investments going to be like, right? And what I'm largely sort of alluding to is what are some of the, I mean, you've mentioned of the areas that already excite you, right? But a lot of these tech opportunities are, we know of these opportunities. They're getting discovered
Right.
fast. They're also getting commoditized very, very fast, right? Right. But that said, what are some of the upcoming opportunities that you're excited about? I mean, cryptos is what we discussed, right? That's definitely becoming big. NFTs is again, a subset of that becoming large. What are some of the other areas that you're kind of looking at, and hopefully we're going to hear of next few investments, on those fronts.
Sure. So this is, of course, again, my personal opinion. We've stayed away from e-commerce for the longest time when it comes
Interesting,
to investment
right?
because we realize there's always Amazon, there's always Flipkart, and you just cannot compete. But what we've also realized is the fact that video commerce is something that is still extremely underrated at this point of time in India.
Right.
That is where I really see the biggest scope. That is where I see the biggest e-commerce shifting to. Now, when you talk about investing onto them, it's not going to be about the product. It's more going to be about the entire business model that you create. I mean,
Right.
we're happy with Amazon not because of the kind of products that they're offering, but the kind of customer service per se that they're offering, the kind of logistics that they have.
Right.
Any company who can actually crack onto that with a brilliant segment of video commerce, local influencers, tier two, tier three, uh, selling anything and everything out there under their
Right.
affiliates as well, or coming up with new products. I think that is something that will be here probably within this year.
Interesting. Interesting. I think, if you really ask me, I think I'm particularly excited about what's happening on e-commerce. And, it's come back how? And I think, we didn't necessarily discuss this, Akshay, but I'll possibly, we're going to save this for our next conversation, right? Is what D2C is doing, right? I am
Right.
personally excited about what D2C is doing. The way these brands are taking over from marketplaces, right? And building a direct
Absolutely.
relationship with the customer is phenomenal, right? I think that's just a very, very exciting play which is getting built. My sense is at least 100,000 brands can be built in a market like India,
Absolutely, absolutely. You just
which
need
is
to pick up
phenomenal.
your market. Just pick up your market and you'll be there. I mean,
Interesting,
with the
and
kind of population that we have,
I'll wait to hear from you in terms of how do you crack that one, right? On that, Akshay, my last question in this conversation, you've been in a very interesting position, right? Like we started this conversation, right? You've been an entrepreneur. You've seen the good days. You've seen the bad days, right? And the bad days, right? And from that to getting acquired to investing, mentoring, handholding a lot of these founders, right? You've come a full circle, right? It's possibly been a very fulfilling journey for you, right?
right,
But at the same time, I personally believe that every single founder has, his or her journey is very unique, right? And there are a lot of, learnings that you have, right? There are a lot of takeaways that one can have from that, right? I usually have my last question reserved as an advisor or suggestion question, right? That my guest can offer to many people who are going to sort of watch this. It could be motivation. It could be a little knock on the head, right, of sensibility. Would love you to give out one suggestion or advice that you think is just so much more critical in the times today, right? To ensure that you continue to stick to the cause and you ensure that you're fair to your consumer all the time, right? What would that
absolutely.
advice be, if you were to give one?
I think that is exactly the advice because you need to think about your consumer. You need to solve a need. I mean, a
Right.
lot of times entrepreneurs confuse the need with a must-have or a good to have. Uh, just make sure what exactly are you trying to solve first.
Sure.
Mentors are the most important guys in your journey, always.
Interesting.
And get your paperwork and compliance always in place. So one thing, in fact, that I forgot mentioning to you about the founders and the conflicts, uh, get the the founder SHAs
Mhm.
ASAP. Get everything on paper. Put on your internal vestings as well,
Interesting.
because you never know what happens tomorrow. And this is just pure out of experience that I'm telling you that it happens way more than you can imagine.
Interesting. But keep the focus on customers and keep your paperwork in
Absolutely.
order, right? I think
Like
this
they
is the
always say, the customer is always right. They definitely are always right.
and paperwork is also important, right? Don't forget that.
Paperwork is extremely, extremely important. I mean, a lot of people do miss out thinking, अच्छा अब देख लेंगे हो जाएगा. वो होता नहीं है.
Right.
Once that ship has sailed, then you're already in a mess.
Interesting.
I mean,
Interesting.
most of the time we start counting. Okay, now I've got let's say a 10 lakh. I've got 10 lakh in the account. I've just made that sale. You still need to realize you need to pay taxes on it. You
Right.
need to cut those GSTs. Even don't cook up those stories. I mean, a deal is not complete till everything has been taken care of.
Interesting.
So
I think, with that, Akshay, with that, advice, suggestion, right? I think we're gonna bring this session to a close, right? I think it was a lot of, you know, trying to kick in some sense, right? And that sensibility is very important when you're trying to build a business, right? While
absolutely,
there's of course an aspirational side of it, and there's a creative side to it. There's always, realism is also something which is very important. I mean, we're part of an
absolutely,
ecosystem where we have to behave as entrepreneurs, as responsible beings, right? Because while of course we're building value for ourselves, we are reaching that point of self-actualization. What is also important is that we become a role model for many people, right? And we encourage them to come in and contribute and participate, right? And I think that's a role and responsibility of every founder. They're in a very unique position, which I think they're blessed to be in that position, right? Not a lot of people who are employed will ever get that opportunity to encourage many people around them, right? But I think this is a very unique position, right? And that's essentially what my takeaway from this conversation is going to be, Akshay. But listen, thank you so much for doing this, right? I think
thank you so much for
there
having
are
me.
very unique journeys where founders you know transition into becoming investors, right? And there's just so much more executional intelligence, which trust you me, we cannot, irrespective of how hard we try, we cannot capture all of that in a video format. I think a lot of that happens when you come in and interact, right? And I think you've always been very open, Akshay. You've been very forthcoming, right? You've been very liberal, very easy to come in and talk to, right? And I would encourage many of the people who are going to be watching this to approach you, to speak with you, right?
More
Because
than happy, more than happy.
both of those experiences are very critical. I think that balance is very important, right? And a lot of
Again,
occasions, founders need that because they're just too close to the situation. Having their biases could not necessarily result into right outcomes, right? Sensibility becomes important. Akshay, with that, thank you so much for being a part of it, right? Taking the time out. I look forward to another conversation. Cryptos next time, right? Something that you've been excited about. Thanks,
done.
Akshay.
Same, yeah. Thanks so much, Ashu.